What is up, ladies and gentlemen? It's your boy Dom, back in the house. A little bit different of a video this time, more educational, me just talking, and we're talking about unusual option activity. What we do every day, we trade unusual option activity, but the famous sheet here, just to get this out there, every investment carries risk. What I'm talking about carries risk. You have to know what you're doing. You have to do your own due diligence. And yeah, so it's pretty much just knowing your stuff. And this video is for educational purposes only. So yeah, unusual option activity. So what is unusual option activity? When I first started trading unusual option activity, I thought that unusual option activity was only option contracts that traded large amount of volumes that was typically unusual. So for example, if you look up, what's a good one here? If you look up Skyworks, ticker symbol SWKS. And right now I'm working in Thinkorswim. So you just pull down the option chain here. And today we had some unusual option activity. This is a bonus one. The December 18th, 157.5 calls for Skyworks. Pretty short-term trade here. So we had some unusual option activity. And if you pull open this option chain here, you'll only see this today, unfortunately, but I'll go through it. So if you look at some of these contracts here, in December 18th, there's really no volume whatsoever. There's not a lot of volume trading on these. But then today, on the December 18th, the 157.5 strike traded 4,000 contracts. So that is unusual. That's unusual option activity. Yes, when I first started, I thought that's all unusual option activity was just unusual volume, but that's not true. If you're only trading those, you're missing out on a lot of good trades, because there's a lot of good trades where there's like 2,000 contracts traded in a day, or maybe even 1,000. And, maybe that doesn't look unusual just looking at the volume. Maybe 1,000 contracts traded for a given strike is normal. But when you dig deeper, you notice that 1,000 contracts, it was placed by one person, and that person, put down $1 million. So, unusual option activity is not always just sizable, unusual volume for a given contract. You really have to look into it and see. I like to follow trades when people are putting down a lot of money. I'm talking $1 million, $2 million. Sometimes I'll even follow trades where it's like someone's putting down a few $100,000, a couple $100,000. Generally, if someone's not putting down at least a couple $100,000, I won't really consider it. So, there could be very limited volume, that's average, that's not unusual for a given contract. And some people will just skip by. Oh yeah, say it was 1,000 and there's, 1,000 contracts traded, daily. So technically that's not unusual, but somebody might have bought the majority of those, and, that could be a big order. It could be, depending on how much the option contracts are. If that's a sizable order, that's unusual option activity. So that's a really key thing to realize, when you're first starting out. It's not just big volume. Just because you see big volume in a contract, 10,000 contracts traded in a day, and you deem that to be unusual for that stock. That could be a whole bunch of retail traders like me piling into it. And, you really want to make sure that there's somebody in there who's putting down a lot of money, because that's the bulk of, that is the bulk of what you're trying to follow. Somebody who's putting down that kind of money on a trade, $200,000, $300,000, that's what you want to be following. You don't want to be following a bunch of retail traders trading, 20 contracts or, 5 contracts, but there's like thousands of people trading it. Yeah, that can lead up to unusual option activity showing up in the volume. Wow, you look at that, there's 10,000 contracts traded. Usually, that's unusual. But you have to dig deeper and look, who's buying what? Are there big orders being placed for that contract? If there's not, I will completely ignore it, because usually it's just retail traders jumping in. And if you don't know, a retail trader is somebody like me, probably someone like you, who's just trading, from their house. There's retail traders, and then there's institutional investors, and we want to be following the institutional investors, the banks, the hedge funds, Morgan Stanley, maybe they're placing in $1 million option trade. I want to get in on that. So that's really important to realize, because some people will be like, yeah, this contract traded 15,000 in a day. That's unusual. But then my next question is, what is the most sizable order, and is it an opening? Is it a buying order? Because people could be selling those contracts. So you want to dig deeper. Just because you see a lot of volume, like people use barchart.com to spot unusual option activity, and I mean, yeah, that's good to start, but you really need to dig deeper, take some time, and nail these down and see, are people putting down a lot of money? If they're not, and it's sizable, unusual volume, I skip over it. That's just my opinion. I don't want to get in something where it's just a bunch of retail trader volume. I want to get in something with money, with someone putting down a lot of money. So that's just a quick tip for you guys. I'm just here to help, and that's definitely a mistake that I made when I first started. I would see big volume and just jump in, which is not good. I lost a lot of money doing that, because you want to be following institutions, somebody, even a bigger retail trader who's putting down like $200,000, $300,000, $400,000. They might have some insider information. Somebody might know something. So I'm more apt to follow those trades, where somebody's putting down a lot of money. I don't want to be following, just because it's unusual volume, I don't necessarily want to be following that. I want to make sure that there's a big backer behind it. Maybe somebody, had a huge trade, then a bunch of people realize, then people start piling in. That's okay. But you want to do your due diligence, make sure that there's a big trade going on. Somebody's in there buying something. I go $200,000 or plus. Sometimes I'll dip down to $170,000 if it's a stock I really like. I'll jump into that. But I want to see somebody putting down a lot of money. That is top of the line for me. That is the highest quality of unusual option activity. And, they could be placing a big order and not many other people follow in, which is totally fine. As long as someone's putting down that 500 grand, even 200 grand, 300, 400 grand, 500 grand, $1 million. I don't care if one person buys $1 million, $1 million worth of contracts, and nobody else follows them in. I'm jumping in. I don't care if I don't care if a bunch of retail people are following in the big order. I want to follow the big order, whether other people are following or not. I'm going to do my analysis and, come up with a probability of success, for this trade. And if I come up with, a solid analysis, a solid thesis, I like the charts. I like the stock. I like what they do. I like the chart. I like the order. I do the analysis. It's a big order above $200,000 plus. I'm jumping in. So yeah, meant to be kind of a quicker video, but turned out to be 9 minutes. That's all right. It's just more information for you guys if you stick around to watch it. I hope you do. I hope you if you like this video, and that'll tell me to keep making videos like this. And please subscribe and share this with somebody who likes trading, because I'm here to learn myself, but I'm also here to teach you guys and show you guys trades. And probably on Monday, we will have some more trades coming your way and some analysis about the trades I provided earlier. So